guys, how we doing? Welcome to another video about the basics of the Forex market. Today I'm going to talk to you guys about why currency moves the way that they do. Have you guys ever wondered why it moves the way that it does? Right? So this screen right here is actually a different screen that you're seeing than the one I've been showing you. I've been showing you trading view, but this is actually a terminal, and a lot of the Forex gurus out there will never tell you about these terminals because this actually gives you an edge to the market, right? So this terminal right here is pretty similar to Bloomberg, except for it doesn't cost you $10,000 a year to use. So what actually moves the prices in the market, I'm going to show you, and I'm going to show you the tools that we use too, right? So the basic reality of how the price moves is actually buying and selling pressure. When people want to buy more euros or GBP, for this matter of fact, if people want to buy more, the price goes up. If people want to sell more, the price goes down. It's simple supply and demand in action, right? Now, the big players, the people that you deposit your money into, JP Morgan Chase, Goldman Sachs, right? All these guys, right, they create major movements. Now, when I say major, let me tell you, within the Forex market, right, retail traders like us, we don't move these prices. These candles, when we enter, they don't move at all. The whole country of retail traders can enter at a position, the same exact position, and this candlestick right here barely even move an inch. Hell, it won't even move a decimeter. When companies need to change billions of dollars, that's when these candlesticks actually move. So yes, retail traders like us, we have no say at all in where the prices go. Pension funds, banks, massive amounts. These are what moves the price. Reading the price, right? I'm gonna show you guys a little tips and tricks of the trade today. So when you see, so this is a little bit more advanced and complex stuff, but I don't want to confuse you, so I'm gonna tell you exactly what I'm seeing on my chart. We are in a bullish market. Okay, we are in a bullish bias, and according to my currency meter, right, as you can see, GBP is being favored versus the USD, right? No thanks to the rate cuts, right? The GBP is actually doing better than the USD right now. So I'm going to show you basically how you can tell if there's a huge amount of selling pressure is when you can see these red candlesticks with displacements on the inside. This is called a displacement. And up here is where they will usually have their stops. So if somebody were to go short right here, if somebody were to sell right here at this point, they're going to put their stop loss up here. Just how it works. And the banks knows that, they can see it. And if you don't believe me, I'm going to show you how I can see that too. See all this right here? All sales, that's all selling. So when you see this right here, that's what this is. Somebody was selling at these price points, right? And they're putting their stops up here. So more on that later. Another thing that we use to help us figure out the direction of the trend. Now, when I say trend, I don't mean it's gonna go up here, right? Or it's gonna go down here. No, that's not what the trend is. The trend is actually different than the bias. Bias is also different than the trend. So I'm gonna go into more detail about that later, but I'm gonna show you what I use to help me figure out where to start looking for the bias for my trade, right? So as you can see right now, the price is closing below the 26-day EMA, right? But it's also above the 9-day EMA, right? So for me, right now, this is a gamble. To me, this is a gamble because I don't know if it's gonna go up or go down, right? I can do all the technical analysis that I can, right? But at the end of the day, I don't control the market, right? So what I do is I wait until the price either closes above both EMA lines or wait till it closes below both EMA lines. Then I'll know I have a sense of direction of I'm gonna go bullish or I'm gonna go short, right? Another tool I'm going to show you. Now, all these things right here I'm telling you is to help you pinpoint how and where the price is moving, right? So like I said earlier, when it comes to supply and demand, this actually tells you where we are in the supply and demand level. These two lines right here, I don't know if you know much about the RSIs. Now, if you are a beginner trader, I suggest you learn how to use these tools, because this bottom piece actually means it's oversold, and the top piece actually means it's overbought, right? So when the price was over here, right? This is the 25th. Let's see, today is the 20th, Sundays, Saturdays 27th, Friday is 26th. All right. At this point is when I went long on the CPE news on Friday, and it hit my TP at this point, because I already knew it was already penciled in for the expected percentage of the CPE news. Again, that right there also moves the market, but at the end of the day, supply and demand takes priority. So here, as you can see, right, we are in the bullish market. Deep PB means deep pullback. We are in a deep pullback. Now, what they're doing is that they're actually driving the price up to where they can grab more buy side liquidity. Now, for the how do I put this simply? If you want to buy something, most of the times you wait till the price goes down, right? Well, in the Forex market, it's the same way. If you're planning on going short, meaning selling the position, if you're planning on shorting, you don't want to short it when the price is in discount. That doesn't make sense. You want to wait until the price comes up to another PD array zone, which is about right here. If you look at my Fibonacci, anything above the 0.5 line, I consider as premium pricing. Now, when the price is in premium, they have to lower the price, right? To get more action in the market. Now let's go back here, right? I'm gonna go over something with you real quick. All right, so this is the Tuesday's news, right? Tuesday, this is Wednesday's news. ADP national employment, right? Comes out at 7:15 Central Time Zone. The forecast is at 50K, right? The highest we have ever been is 75.0, and the lowest is 23.0. Previously is at 54.0, right? Forecast 50.0. That means we actually have less employment, right? Less employment means what? Consumers are stopped spending, right? So when that happens, what happens to the US dollar? Plummets, right? So this right here actually gives you a heads up. We were at 54, now we're expecting 50K, right? Well, that's not good. That's not great, because now we're 4,000 less than how our labor force is supposed to have more, right? The more people working, our economy is going around in circles, right? So this is how we get an idea and be like, we're going to expect a bearish market by Wednesday. So I hope I have given you guys enough information today to help you put things into perspective here. Again, I'm going to have a link for this terminal. If you want to check it out, I'm going to have a link that you can click on. If you guys have any more questions for me, please do comment below. Like and share this video, please, to help me out. And on top of that, there are people out there who is looking for this information, but they can't get it anywhere else without paying for it. So thank you guys. I appreciate you guys tuning in. I hope you guys have a great week. Thank you.